All right. Good morning, everybody. This is a boring hurry up and wait kind of week. So we are getting a little bit of a rebound at this point. It could be mean reversion for all we know. They did roll up the call side, so we're likely going to see a change from that point of view. Green on the screen around the world. UK is basically flat. Japan is up again, another 1.5%. Small caps right behind that. GME has earnings today, and there was a little bit of just a little bit of flow yesterday, kind of suggesting we could see some short squeeze going on. So kind of think back to the whole Reddit GameStop short squeeze list, AMC, GameStop, even names like Kroger got that short squeeze. Weight Watchers, I think, was another one. The list is endless, right? And we've shown more than once how to go over to FinViz and look for things that have a high short float. And then, you got particular instances like this where we could see a bit of a short squeeze going on. S&P up a little more than a quarter, and the Dow at just less than a quarter. So we're up, but we're right inside of yesterday's range, and that doesn't set us up for a really good trade position. It's more minutia data today. Just don't get me wrong, all data has value. It's got input, but it's not market moving really at this point. We can see that tonight there's going to be some potential volatility, but that's for anybody trading tonight. We got additional auctions today, and they don't have it listed here as important or as high impact, but manufacturing is a big deal. And if you've been a part of the whole, retail push that we've been kind of seeing, then ties right into manufacturing. So again, it's not that this data isn't valuable or the market doesn't need it. It's just not the kind of market moving news or market moving events that the market's waiting on. It's all PCE at the end of the week and PAL too, right? You get down into Friday, there's the PCE and there's PAL. So, I mean, that's what the market is waiting on. Plus, it's a short week. Markets don't like a short week. This is very likely going to be just a choppy, boring week. I'm going to get some baking done. Some new dinner roll recipe. Volumes are lighter than they were yesterday, and it's not a surprise. I wouldn't be surprised if tomorrow they are as light as they are today, and maybe even a little lighter still as we get closer to the end of the week. We don't have an MDP. We've already hit it. It's a missed daily pivot, but we do have one from yesterday, and that's when it counts. Remember, when we get a missed daily pivot, it doesn't actually count until the end of the day when the market closes, because then we can say we made it the whole day without hitting that pivot. Now that we've done that, we technically have a missed daily pivot, but we're already starting to turn it. So at this point, we're above today's pivot point. We are back above the previous week's close, which is a really good start. Holding above VWAP reasonably well. And notice that we're not getting reciprocation yet at this point this morning. We're holding above the VWAP. And when we did get down, it was just to get into the liquidity on the other side. And we went right back up again. Also, the distance from VWAP is getting bigger each time. All right, so all of that bullish signals bullish bias. The flows are there. They're not overly strong, but they are there. And we do have an inside day breakout already. It's just like what it sounds. This is yesterday's price action. And we broke outside of it. Inside day breakout. Right? So we could get a Busby, right? Persistence beats resistance. We continue to test resistance until we finally break out of it. Price, generally speaking, after it gets through resistance, likes to pull back and validate old resistance as a new support. That gets tired. You know, you have to say that sentence all the time. Broke through resistance, pulled back, tested it as a new support. I got really tired of saying that, and I came up with a phrase, Busby. I named it after this grumpy old guy who was basically screaming at people in a webinar about breakouts. And I thought, well, that grumpy old jerk deserves some credit for this, because now every time I think of a breakout, I think of this guy. And so I named it after him. There's no magic behind it. When price breaks out of resistance, it can be anything, a pivot point, yesterday's high-low close, a rectangle, even a head and shoulders neckline. Anything that was resisting price, when price finally does get through it, it very oftentimes will come back and validate that old resistance as a new support level. Busby. If you look at trends, a lot of really great trends often started with a breakout of resistance, which means they also often started with a Busby. You can use it for trade setups. You can use it for validation. Just so many different ways. If you wanted to try to trade with it, just keep in mind a Busby play only owes you back to the peak. So you got to kind of try to measure this distance and decide if it's worth your time. This is a 15-minute chart, so there's a little bit of room here. But you could imagine, you know, if we were on, say, a 15-second chart, you know, like a jigsaw or a book map order flow, really tight chart, or even just a 2-minute and a 5-minute, there might not be very much room here within that Busby to give you anything. But if this is a breakout that is to turn into a trend, this would be one of the first signals, right? That way it would break out of resistance, pull back, get the Busby, comes back up to the high point, and then breaks and continues through that zone to the upside. It should get tangled up somewhere around 1236, meaning it already made it through the 111, a warning center, and then paused against that 1236, pull back to 100. Then once it does that, you're clear to move the fibs up to put your 100 where the 1236 was, and that will give you a pullback of like a 786 dynamic fib placement. It's not a really popular thing, but if you're using OCR style analysis and trading one candle reversal OCR, then it probably makes a little bit more sense. Yeah, good morning. Did you show up late? We're still holding above the weekly pivot point. We didn't hit it at all. Depending on where your analysis is working from, you could very easily be using a weekly pivot point. There's nothing wrong with it. Pivot points are nothing more than math, so you can use them anywhere, which always surprises me when people say, I didn't think about using a 1-hour pivot or a 30-minute pivot or a 5-minute pivot. Open, high, low, close divided by 4, or high, low, close divided by 3. It's a pivot point. We still don't have any expectation of doing anything until next week. So at the very least, not expecting anything out of the market until Friday. If you're going to play the short day on Friday in the futures, you might get a little bit out of it. Otherwise, it's just a boring week as we wait for next week, which would also put us into a new month. So the put level and the call level got moved, I believe. Yeah, there's the put wall. Put wall seems to be in the same spot, 50-60. It's so far down at this point, it's really of no consequence to us whatsoever. If that moves, then we would have something to consider. But at this point, down at that level, and I know I did this, but I'm going to do it again. Going to put the spot gamma level in there. When I load my chart some mornings, this sometimes grabs the wrong level. It says the 26, so I can see I already did it, but just never trust Thinkorswim. All right, and they didn't have the AM edition of the Founder's Note out yet, so I hadn't shared it. But they just came out with it. So I will get that shared with you guys. And then we'll go and look through it, make sure there's nothing new in there. I'm not expecting any surprises, but you never know. Nope, it's really short and sweet to the point. And the gamma index is still sitting at like a 1.2. So really nothing's changed in there. Really quiet, really boring Founder's Note. The PM one from last night actually had a lot more insight into today than this one. It looks like they just copied yesterday's and reposted it. And if they were going to do that, they could have had it done 2 hours ago. They are discussing the fact that realized volatility should start to sharply contract in the remainder of the week as traders shift their focus to the holiday weekend. Gee, yay. So let's go ahead and clean this off. The call wall's at 5,300 now. I say that on the SPX, but the ES is not 53. So 5360. There we go. So there's the ES call wall 5360. What I want to do is just take all this stuff off. So I already marked out yesterday's range. We've got a lot of things to work through, all of this. And right now the question is this just a pullback before we continue lower? Or was this the pullback in a trend and we're just going to continue higher? There's no reason for us to assume that we know this answer ahead of time. We've got the longer term half back going in this direction. And we didn't get down to that halfway point, right? That 52.45 that we talked about yesterday. We didn't come down to that. So yesterday's pullback, really mild, not very aggressive, didn't even come down to the halfway point. Now that we've started to turn and begin working our way back up, that gives us a chance to snap this fib here and contemplate that half back. We don't even need to focus on these levels at this point. We just want this half back. So we're struggling here. Resolving this issue is really going to resolve the question on, is this a trending market that is pulling back before it continues on? Or are we just pulling back before we continue lower? If this is just a pullback before we continue lower, it pulled back a bit more aggressive than we would have normally anticipated, right? It's if I'm bearish and I've got a market moving to the downside, I would have wanted to see aggressive shorts come in a lot sooner than now to take this and continue it to the downside. So to me, it pulled back too much to be a solid short. And yet we've stalled out. So there's an argument about being a long again. So you can use just some generic textbook concepts like this high here and the fact that we're going to get a lower high unless this just runs all the way back up. If for any reason it comes back down and breaks this low before coming up and breaking that high, then we will have our lower high. Now you can go into whatever time frame you want. So in a lower time frame, these pullbacks and legs lower would each be considered a lower high, lower low, lower high, lower low, right? And now all of that is turning around so that we've got a higher low, another higher low, and now a higher high than this one. So 2 higher highs, 2 higher lows, that's a full set. That would be a trend reversal if we were using this smaller time frame with these lower legs. Putting it on something like an hourly kind of cleans things up a little bit. So we don't have an answer yet if we're just using technical analysis because we don't yet have that higher low. We don't yet have the lower high. So this needs to do something, right? Either it comes down and breaks, which would then give us our lower high and a lower low, or it runs back up and at the very least matches this previous high and or exceeds that high. Until then, we've just got this range that needs to be resolved. Looking at things on the weekly, we can see last week's measured move, that 50%, we never got near it. We didn't get anywhere near it. 52.52 or 52.50 if you just want a nice round number like we talked about yesterday. And since we're back above the close, that's a mildly bullish bias. We didn't even get down into the 10 on this bit of a pullback. But this bit of a pullback right now is really what the entire thing is all about. There's our breakout, run up. There's our Busby. Now we're just discussing whether or not we're going to come up and complete that Busby and then continue to the upside, or if this is actually going to set a lower high. And to do that, we'd have to break this low. Yeah, it is. It is a TRB, trendline breakover. And for whatever time frame you'd want to use, it owes a run back up to the top. But if you look at it on a daily, it's not really a TRB here, right? Not really. We didn't base it down here. If we'd have had one more day, especially like an inside day first, and then the breakover, then yes, and it would be 53.20. But on the smaller time frame, yes, you're right. It is a TRB. TRBs are nice. They generally will make it back to the top in a single day. So It's a nice setup. They're not always so pretty. It's a boring, boring week. All right, I talked about the flip and the possibility that we could find some structure here, some support, and turn around, even though there really wasn't anything here to support us. I know it's weird how that happens, right? But think about a correlated market or an inversely correlated market, because we just don't know what hit something and turned us. But this is the tricky thing about being a pivot point trader. It's not always the thing that you're trading that hit a pivot point. And if the thing that you're trading was influenced by something else and that thing hit a pivot point, it can turn your market around. I came across that logic because when price does turn, when I was newer, I would go hunting for why did it turn there? Of all places, anywhere in the entire chart, why did price turn right at that spot? And sometimes I could find the answer. Sometimes it was very simple and obvious, like yesterday's high or yesterday's low. And sometimes I couldn't find it. And I thought, well, I must not be looking in the right spot. There's got to be something there that we hit. But that's not always true, right? Sometimes it's the correlated market hit something. So at this point, we still do have that shallow area. If we break our own low here with that 52, call it 52.75 just for some easy numbers, then we're likely going to complete the move through the shallow area and get down into the point of control. Or at the very least, get back into the value area high at 52.50, nice round number. We've got a lot of work to do. Notice that we still just don't have the volume. This is where the point of control is. Point of control is the signal for the greatest amount of volume within this chart's time frame. So if most of the volume is right there and we're barely building out anything at where we're at, we need to stay here for quite a while if we're going to get that, or we need some bigger orders to come in. And we're really not spending a lot of time here yet compared to where we spent time by volume down here. So at this point, we got nothing. We are slowly building out into the classic B. But at this point, we still got nothing. We did hit Friday's VPOC. It is in play today, so we wouldn't take it off yet. We want to leave it there for the end of the day. We'll take it off tomorrow. It's a perfect round number, 5,300. It was untouched, so we were carrying it forward. Now we've hit it. We want to see, this is a first touch play. I really like that trade. Sometimes you'll try that first touch play and just get completely run over. But this one worked out pretty good. It's exactly like what it sounds when price gets to, a volume level like this. You could attempt to go in the other direction. It doesn't owe you very much. Usually you can get, 5 to 7 points, 3 to 5, maybe an overshoot of 7. It's not a big runner. But because the entire trade is so small, you can usually use a relatively decent stop, and it's just like a medium conviction play. It's not a high conviction, certainly, but it's not just straight up gambling either. So now that we've got that pivot point, we also now need to resolve it. There's a lot of volume up here, considering we haven't spent a significant amount of time up there. You can see how the TPO is showing we've been here for a little bit, but nothing compared to the amount of time that we spent down there. And yet we're almost about to move the point of control up to this new location. So price came up got into a lot of volume up here, and we're about to move the point of control. That very well could become a cap that price is going to have to fight through later on. If you were using something like Bookmap or Jigsaw, then you should be able to see the cumulative divergence, cumulative volume divergence, and you should be able to see the orders sitting on the dome higher up, see if they're, building up levels here, and whether or not they're stacking every time we get into it and kind of pull out. Do they reload? It's order flow 101. Without any of that, just looking at it visually, it looks like we just hit a ceiling, need price to digest it. And if we break through our own Globex high at this point, which happens to also be that round number, then this would be a reasonably decent support for the rest of the day. Otherwise, if we reject here and get a lower low, then it's going to be the thing that's holding over our head for the rest of the day. This albatross around our neck, right? It's the thing that we've got to have to resolve at some point. We're still more than 3.5% above the 10-week. So from the longer time frames, everything is still intact. Nothing has changed. No radical, divergence from the consistent analysis that's been in play for a while. The markets are just on pause, waiting on data. You can see the difference between what we had measured on Friday. Remember, this box was still alive. It was still moving. And what we got once it was locked into place at the end of the day on Friday. So keeping the size of the box like it was on Friday, we could just readjust it and see that this week has less volatility than the previous week. At this point so far, it seems like they could have ratcheted it back, the volatility, even more, because this entire market's in hurry up and wait mode. More than 0.5% above the 10-day. We didn't get that reset that we were looking for, but we are still maintaining this range. And it's really curious because, we've never had anything so consistently stable like this before. At some point, it's going to break, but this is very organized, which is another sign of reducing volatility. It's also a signal that things are more tightly correlated, which, I don't know, it becomes a little bit dangerous at that point, like a crowded trade. Really, the only thing that's down this morning is Bitcoin, and that's not much of a surprise, but that's all that we've got to the downside. On the upside, we've got the semiconductors, the Mag 7, precious metals, semiconductors again, biotech, the FANGs or the Mag 7 again, China ADRs. So that's not bad, but we want to see some finance in there. KRE is just barely waking up. XLF is up a little bit, not enough. It's not hitting our benchmark of 0.5%. So we're getting a little something out of things like Bank of America. Had that really strong breakout, faded to the downside yesterday. Now it's up to 37. This would be a red to green if we can get it to turn around, right? We're at about 37 this morning. So, we're looking for a gap up. It doesn't have to get above yesterday's open, but if I'm looking for a long and I see that it closed at the lows and then in the after hours and pre-market, it ran up and it opens below the previous day's open, that's a nice level of support. We can look for it to fade down, bounce on that at the open, make a run, break out of yesterday's high, get through the other close. And then we have to worry about those sellers across that 37.5. It's a cheap market, right? It's $37. So 50-cent move, that's a pretty good size move on a little market like this. If this falls back down and cuts below 36.85, then I would run it to 36. It's not asking for too much. It's literally just getting back into the midpoint of, or the earlier part of Wednesday. All right. So yesterday when we were talking about Bitcoin, it was just coin, right? It wasn't, or it was just Bitcoin. It wasn't the miners. It wasn't the proxies like Mara, Riot, Coin, Hut, Hive. It wasn't any of those. So this morning when we're seeing this weakness and looking at Bitcoin being down, it's very likely the same thing all over again, that it's just Bitcoin. It's not the proxies. And that was a pretty good move yesterday. So it kind of makes sense that we're down a little bit this morning. And all things considered, the way Bitcoin can really move, we're not down very much. And from a topping pattern point of view, that was a heck of a pullback that we got. But put it on a weekly, and you really see that this is a transition period. It's a really dangerous situation. It's a no-win situation to guess on something like this. Really big wicks on each side, lots of money in here. I wouldn't try to guess or assume. So you can play some measured moves at the very least. Say line up on this candle where everything turned around. Got your half back there. You always have last week's levels. So of course you can do the same thing on that as well. And just keep in mind that this bar from the 11th, all those sellers, we don't know if they're done yet around that 72, really everything above 70, which we're into right now. So for the Bitcoin, I would look at a lot of those proxies. If you're going to try to play long in this, and there's 3 tiers that you can use in Bitcoin. There's a nano, which is really, really small. If you're learning to trade and you're trying to get out of paper and go into a live market, but you're still really nervous or you're, say, using a small account, the Nano Bitcoin uses $50 of margin and risks 5 cents per tick. I mean, it's crazy, crazy small, right? But it's an actual live market. So you can kind of slowly transition yourself out of paper into a live market. Then there's the mini and then the micro as well for Bitcoin. And this thing takes a lot of margin when you're trying to play the big one. So, it's definitely not small account approved. Looking at what else is moving today, we got gold miners, the semiconductors, China, uranium, China ADRs. So we could look at things like BABA. There was some Apple Baidu news yesterday. So not a surprise if we see Baidu looking a little different. It's just a whole lot of indecision candles at this point. This really big bar right here from the 22nd is the bar in control. We got to get out of that to do anything else. And we can see a high volume anchor yesterday afternoon. I didn't check the market on close on this. There's a website called Market Chameleon, and every day we get these numbers. So I'm not signed in. Just go to stocks, go to stock order imbalance. This is a filtered market on close. The signal needs to have at least 50,000 shares. That's kind of their generic little filter that they're using. And you can come in here and you can look at the names that had a market on close, like BABA did yesterday. There was a buy market on close on the buy side, but we weren't looking for BABA. We were looking for Baidu, which is not in there. Oh, well. Didn't hurt to look. So with the China ADRs being up this morning, could keep your eye on things like BABA, Baidu, JD. Looks like we're nearing an inside day breakout here, if it can keep it. Zooming out, you can see we're still, a long ways from being in a healthy market on this thing. PDD. This was doing really good, took the smackdown. We have had a liquidity gap that needed to be resolved. It's been resolved. Then we had a dark pool print, big, wild, crazy wick. Now we've got to resolve this pullback. So this thing is just all over the place. And for China ADRs being up this morning, this one really isn't doing that hot. When it comes to China ADRs, this company EDU is one that I've continued to focus on for a long time. Mainly because I remember the short report when it came out that took it from these highs, right? And they had to clean up their act, and they've slowly been working on, clawing back lost ground. That was a mid-afternoon short report too. That didn't come out first thing in the morning, but it certainly shows how an analyst can change the narrative of a company. And man, they gave them a beat down that day. DBA agricultural, this is, straight into commodities. there's not a lot of companies or ETFs or products that you can use for agricultural, commodities. So this is like a lone wolf, and it is a solid representation of that space. It's up this morning. Nice continuation after the pullback that it had, kind of digesting. And now, I mean, look at that thing. It's just fantastic. On the run again. Precious metals, so gold miners, silver, even have some pot stocks this morning, which, I mean, at this point, they might say it's up a little, but it's not looking all that great. So a mixed bag, a sloppy narrative. We have no dominance in anything really. And with the three big names getting probed by the EU for, some kind of tech violations, then they all have a negative press right now too. So Apple is up from where it closed, not by much, and still inside day. It's got a lot of work to do to get outside of yesterday's range, then get through Friday, start working on Wednesday. It's a mess, right? So it's not looking all that hot at this point. Google working its way up to an inside day breakout, solid rejection. It gave it right back again. Looks like it's struggling around that 150, but now that it's above the 150 again, we really want to see it hold above that 150. If we can get through this big day, say that 151.5, break through these highs up here, then we've got a nice expansion to the upside. We can start worrying about that 155, but it's got a lot of work to do. So we're looking at lows here. Got a really big scoop pattern on the weekly. Right back up into this resistance here, this 262. Took a little bit of a smackdown last week. And so far, we're holding above the 50% mark, which is a nice little bit of a reset, right? So be good to see if we can complete this move. So we were in a range, but it was tightening up, right? We were getting these higher lows and pretty much equal highs. Then we got that higher high. And if we were to compare, that was a lower low. So that's a little bit of a megaphone pattern, a bit of a signal, then the big breakout bar. So we're looking for a continuation. Need to see a pullback to continue. If this is the pullback, then it needs to hold this 252.75. If it's not a pullback, if this breakout is actually failing, kind of back out and look at the bigger picture. We were in a pretty decent range here, holding above that half back, I might add, on that week. You can see how breakout week, we held 50%, and then a new breakout week, so far we're holding 50%. If it doesn't hold, we break this 252.75, then at the very least, we can run it back down to 250 with an overshoot into 245. Lows isn't the best when it comes to options, but I mean, it's not horrible. It's not fantastic either. Microsoft gap up this morning. It's got to keep it. It really needs to keep it. We don't want to see it come down and close this gap this morning. Otherwise, the flows on the week, I mean, this thing is just nasty looking. So keep the breakover. At this point, get above our own Globex, that 426. We'll go for the 50% of this, which is 426.61. So we almost got there in the pre-market. Notice the levels are already here from last week's big candle. All right, we found yesterday that 422, that 50%. It's perfect. So now we need to keep it and continue this breakout, because that's what we've got, is this really big range and a breakout. So Busby, make it back up through 430 and continue to the upside. Netflix is wedged. It's getting tighter and tighter and tighter. Don't stress on where the line is to the downside. It's just a visual for your eyes. We continue to get these higher lows. And this is just compressing tighter and tighter and tighter. Thing is gonna make a move, right? Now, which direction it goes kind of becomes the question. We're already through the halfback on this really big measurement. We're supposed to get into that 650 and then try to resolve this high. But with this thing wedging up like that, it starts to call a little bit into question. I'd say as long as it's maintaining above the 3, then as sloppy as it is, it's just still a grind to the upside. If it cuts 3 and you want to get aggressive, then you could try to short it to the 10. But I mean, you're trying to short something that has continued to just grind higher and higher. This is a nasty looking chart. So, I mean, on the weekly, it doesn't seem that bad, or even on the monthly, it looks fantastic. But you get into those smaller levels and it just looks like trash. All right, Oracle had earnings, so we got that big pop up, gave it an island now, and needs to keep it. If it gaps back down, then this would be called an island reversal. Right now, we're tangling up into those 10-day moving averages, but the real key is this pullback here. We don't want to see it get below 123.5. We really don't even want to see it get to that level, let alone get below it. There was a gap here that needs to be resolved. That's 125.54. Now that gap wouldn't be such a bad one to close. The thing is, it was really bullish to gap up like it did for earnings, and digesting was fine. There was nothing wrong with that. But this big gap down where it closed here and it opened it there and then it rallied back up, that's not good. This big gap, okay, that's awesome. And if it had kept it and run, then that would have been a great signal that we could look back, look for the breakout above this, point to this gap, and just talk about how strong and amazing this move is. But instead, it made that gap up and it just rolled right over. It's like the sellers aren't done yet. And it seems to be sell the rip, not buy the dip. And they're just still looking for more people to take this off their hands. That's a very strong gap up, really powerful, and it should have stuck. So the fact that it didn't, even if it finds support here and chops, I would want to see a definitive close above that 130 with some conviction to show that this is actually going to do more than just lure in more people to dump it on their head. It's going to be a boring day, guys. Continue to look for the dominant ETF on the day. See what's moving out there. Open the ETF up. Find something inside that worth trading. I was kind of looking forward to some financial plays, but other than Bank of America, there's really not a lot of bank names moving this morning that I'd want to mess with. So I might see what we get out of this, but otherwise, with everything on a hurry up and wait, I wouldn't get too excited about the possibilities. Be careful, be safe. I'll see y'all tomorrow.